Welcome to another episode of That Crazy Triangle Guy. Just wanted to get a quick video out, hopefully, to you today to show you what I'm seeing in the charts. Uh, Overall, Bitcoin's taking a little bit of a downturn here, and this is looks very healthy. Nothing to be concerned about. We're staying within this white dash channel, which goes all the way back to November, that we've been trading in to the upside and downside, upside and downside. Now, mostly since January, we've been staying in the upper portion of this channel above the center line, only falling down this one time in March when we had all that FUD about the SEC cracking down on Kraken for staking and the New York Attorney General suing KuCoin for operating in the United States, etc., and a bunch of other FUD. Along with, I believe, maybe some CPI, bad CPI data we had back then. I'm not sure. Anyway, otherwise, we've been up here in the upper portion of the above the center line, or just below the center line in the upper half of this channel since January, and I was hoping we would stay up there and believed we would be staying up there, but we have come down just below the center line, which wasn't really giving me any big warnings or anything like that. This blue line that I marked here was the limit that I put, just for myself. It was the lowest point here back in February that we had wicked down to. So I just put that line there as a bit of a alert to me. And we are crossing below that now. We still have, we're still clearly within the overall channel and have other areas of support back here. And this was a opportunity. I'm going to have to switch to another thing in a second to show you. These arrows that I've marked here represent where the mean band of the weekly Gaussian channel will be, or were. This is where it was at 26,500. This is where it is now at about 26,200. And next week it should be down about 25 something, 25.9 possibly. Heading into the FOMC meeting, which I've marked here in the lavender vertical line, and the next CPI data comes out on this blue vertical line on May 10th. The lavender line is May 3rd, I believe. The FOMC meeting is 3rd or 4th. I'm going to have to, I think it's May 2nd and 3rd that they meet. Yeah. So I will go there now. We're safely traveling in parallel channels that I've driven it, drawn. I will go to my weekly view right here. Here's the Gaussian channel and Bitcoin. I'm using the Bitcoin index on TradingView in case things maybe look slightly different on your charts that you use. This is the weekly Bitcoin Gaussian channel, which is what we've really been looking at as far as repeating what we've done in back in 2015. Not necessarily 2016 2019. This is 2019, 2020. This is I think we're more similarly following what we did in 2015. Um, and what we did back then, well, you know what? Let me just zoom out here for a second and show you what we did back then. See, 2020 was all jacked up because of COVID. Um, and what we did here in 2015, you can see that we went out of the top of the Gaussian channel, which we have not done yet. We came to the top and got rejected off of the top. And this is just a wick out on the weekly. So back then we came through to the top and then retested the mean band of the Gaussian channel actually for several weeks here before finally busting out through the top of the channel. This arc that I drew here, I'm trying to estimate the curvature of this band in order to predict it um, later on. So that's what we did here on the back in 2015. And you can see here we are today. This is the arc that I've copied from back then. I wish I could erase all those lines right now, but they're there, so just ignore them. So we've come up, we wicked up to the top of the Gaussian channel, and now we're just simply retesting the mean band. I thought possibly that last week's wick or move down to here, candle down to here, would be enough to satisfy that, and possibly maybe we'd make our bust out now. But I don't. It doesn't look like that it's going to happen. It looks like the market's taking the trader. There's all sorts of people in the market, long term holders, day traders, swing traders, and people trading by the second and what have you. And no matter what you feel about all of them, they all contribute to a healthy market. And so that's simply what's happening here. They're taking advantage of an overbought situation and the fact and the charts. People are looking at the charts that the price action is going to follow the charts. And that's merely what it's doing. And traders are taking advantage of that, and good for them. Um, so here's the arrows that I marked, marking the weak band on the mean band on the weekly basis, and the lavender line, which marks the FOMC meeting. So these are levels that we could realistically and healthily come down to. There's 26,200 is the level I'm looking at, and I think that'll probably be our bottom. If we in fact do come down that far, we don't need to. I mean, I think this satisfies what we need to do um, as far as testing the mean band. We already did test it back here in April, the beginning of April. So I don't think there's any really clear set rules, um, but I do see us possibly hanging out in this area um, leading up to the meeting next week. So a lot of boring sideways action. As far as this level here, about 25,900, where we could come down to the week of the FOMC meeting, I think that's not realistic. And it puts us in an area that's kind of sketchy. And anyway, So as far as downside, that's what I see. But what I also see is where there's a huge. Oh, I did want to show you the Gaussian channel on the daily as well. It's um, it's kind of messy and it's not really set in stone. But when we do break into the Gaussian channel on the daily, we tend to get sucked into it, at least down to the mean band. A lot of times down to the bottom of the channel and even through. So I mean, it's not clear on exactly what happens. We've stayed out of it here, but got pulled into there, got sucked down to the bottom of the channel. In other places, we've gone through and fallen out. Anyway, it sucks you in. Where it sucks you into is not clear, whether it's to the mean band, to the bottom of the channel, or out the bottom of the channel. But if you we turn the Gaussian channel here, we're also battling with that here on the daily with Bitcoin. We had stayed out of it until today. Today we are currently in it, and if we close below, I've marked it off here, 27,500 is the top of the channel, that we will be in the channel and expect to get pulled down further into the channel, at least to the mean band, if not the bottom of the channel. The thing is, this channel has an upward trajectory, so it's moving upwards. It's moving into us rather than us moving into it. Um, so a little bit of downward and sideways action um, would satisfy the, typically what happens with when you get pulled into the Gaussian channel here. Now I've kind of made this extension to the channel here to kind of show you where the bottom of the channel would be. That would be near, uh, that would be near this arrow down around 25.6. The thing is, there's no reason to come down here. If we come down here, this is not bad. We need to stay above these arrows. So probably we just get pulled down to the around where the mean band is, because we are in a bull market, um, the start of our bull market leading into the halving next year, and we're in a strong place. We're not in a place of weakness here. Um, Many attempts to get below here will get bought up. I'm sure. Anyway, the mean band would be going way up there. So if we get pulled down to the mean band, maybe in the next few days, we could approach the bottom of the mean band on the weekly um, this week, which I think is more realistically what happens. So get rid of that. Okay, onward. Talked about the Gaussian on the daily. Don't need anything for that chart. I talked about. I believe I've talked about everything. Oh, so um, still, we should expect a bounce from here. The market is just being drawn down to test the mean band here. Uncertainty leading into the FOMC meeting, which is always the case. I don't know why that has to be. Nothing's really changed. Powell continues to do what he said he's going to do. Inflation looks like in everything that's happening is what I certainly have expected. Inflation slowly going down. The Fed continues to raise their hikes in a continually slowing manner, and we may get a pause this meeting. We may get 25. Who knows? Who cares? Seriously. And it's ending shortly after that, either now or soon. Um, and our economy's strong. We have, I expect if any sort of recession is coming, it'll be very mild, and people just like to have things to write about so you can pay for their advertising. Anyway, couple other things. I wanted to look at Ethereum. Um, and we had this breakout. I marked the ascending triangle in yellow that we've been in since June last year. We had a little bit of a breakout here, and we are back in the channel, which happens. And anyway, I expect this to continue. I expect huge breakouts in the entire market coming soon. I mean, these triangles are coming to an end. Render's doing the same thing. We had a little, no, that's Ethereum. Oh, I have Ethereum twice. Sorry about that. Render's doing the same thing on a shorter time frame. I've still all the way since January of this year been forming this triangle, and it's coming to an end here. So I expect huge moves to the upside coming, probably next week after the FOMC meeting, if not leading into the meeting. So timing these things you can't always get, but the charts are charts don't lie. Render's in ascending triangle, Ethereum's in ascending triangle, ready for breakout on both those, as are a lot of the other coins. Are in big time consolidation. Consolidation patterns and are set to break out. And I think it's very unrealistic to think that they're going to break out big to the downside. And Bitcoin as well. Bitcoin's still moving upwards. I see us, let me go to my weekly and zoom out here. In the past, what we've done from the bottom on as we've entered this area in the Gaussian channel is go through the top. We're simply in that stage where we're retesting the mean band and should see that move to the top after this FOMC meeting and busting outward. You know, I see us going up to about $40,000 in the next few weeks. And I'll get clearer on that, but I mean, this is just looking at where we could go and probably bust out there, trade in here, and possibly come back down before the center of this arc here and retest back here around 30,000. It's not going to be 28 or 25. Could be 28. It's not going to be 25. We're not going to have a huge major dump. Maybe 25%, if that. So we'll see what happens then. But near term, sideways and down, leading into the FOMC meeting, possibly to retest the mean band here, and then an explosion afterwards, in my opinion. So I'll leave it there. Make sure you subscribe because I can't get these videos out all the time when I want to. Subscribe and hit the notification bell. Like the video and check back and look at the comments because if I see changes, I don't have time to make a video. I'm going to comment on it. And as I've done, you can go back and look. So I want to keep you up to date on what I'm seeing in the charts. All right, thanks, and we'll see you next time.